Well, good morning. Welcome to Short View Trading. It's Monday, 21st of August, and we want to dig into in this video, how should you go about trading equity markets? I'm talking about equity index futures, whether on a global basis or S&P 500 futures or DAX, NASDAQ, equity indices like that. If you want to trade them either long or short on a 1 to 2 week basis, you need to firstly understand what's been going on, and secondly have an ability and some models based and ideas about how to predict the future. That's what we're going to talk about in this video. So let's get stuck in. Yeah, so indeed what has been going on? Well, in the last couple of videos I've done on this channel, at the back end of July, we talked about initially, has tech's momentum broken? And then last Monday, we talked about, is sector rotation underway? Is the market starting to move away from tech and other sectors starting to take up the leadership? And of course, that's been panning out over the last few weeks. Tech's been literally pummeled. Various key mega cap tech stocks like Apple, as you can see in the chart in front of you now, have significantly broken a major uptrend and been really quite weak over the course of August. You can make similar comments about other mega cap tech stocks, Microsoft, Nvidia, Tesla, etc. So momentum has gone out of the tech leadership. It seems to be rotating. And of course, where it rotates to is critical, whether it moves to that defensive area of the market or indeed the cyclical area of the market. And in fact, you'll remember this chart if you saw the video last week, where we split the S&P 500 into three very major sectors over and above the major 11 sector classification that people typically talk about. And what we do is we split it into cyclicals number one, defensive number two, and long duration growth / tech as the third key area. And as you can see from the chart in front of you now, weakness in the equity market broadened last week. So up until earlier in August, up until the start of last week, it had mostly been concentrated in tech, the weakness that we'd seen in the stock market. Last week, it broadened to the cyclical and indeed partly defensive areas of the market as the weakness became across the waterfront. And indeed, it wasn't just the US where we saw weakness. Equity markets were down in Europe as well. So last week, most markets across the US European complex down 2 to 4% at a headline index level. And the question is, where does that leave you now? How do sell-offs tend to play out? Because they're not straight lines. Just as markets moving higher are not straight lines, they're not straight lines when they move lower. And generally what happens is you have three waves in a pullback. You have an initial wave of selling, as we've seen over the past few weeks. Then you get a bit of a relief rally bounce, what we call the wave two relief rally, whereby markets rally for a couple of weeks and retrace some of their earlier losses over the prior few weeks. And then you have a third wave of selling, typically back to new intraday lows below what you saw in terms of the lows in wave one. Now, interestingly, the models are pretty good at helping you to pick up those waves. The short-term 1 to 2 week market timing models that we publish each and every day in our daily rag trader publication. And as you can see from this one we're putting up in front of you now, this is a put to call ratio. This model has started to get back onto buy. Now, this is interesting because what it's doing is it's showing you how much downside protection traders are buying to protect their portfolios as the market sells off. And as you can see over the last few weeks, over the course of August, as the equity market sold off, traders have been big buyers of downside protection, buying a lot of put options, such that the put to call ratios moved up sharply higher. Of course, this chart's inverted, so bear that in mind as you look at it. So it's sharply high, a lot of put buying. This ratio is now back on buy. So this is one of several indicators we look at on a short-term basis to help us time those 1 to 2 week market moves. And this one is certainly telling us that it's time to start expecting that wave two relief rally. So if you're interested in trading markets on a 1 to 2 week basis, or just understanding what's been going on, understanding the importance of TIPS yields over the course of the last few weeks, how they've tightened liquidity up as TIPS yields have rallied, and that's tightened and strengthened the dollar and put pressure upon equity markets, things like that. You just want to understand that, or if you're interested in 2 week trade ideas on the equity market, on global equity indices, then please do take a free trial of the Daily Rag, also known as the Rag Trader. Simply click on the link below. All we ask for is your name and email address, no credit card details required, and we will send you the Daily Rag for a bunch of trading sessions for free, and you can see if you like it and if it's of interest. If you're a subscriber, you should have had the email in your inbox around 9 a.m. London time, 8:30 a.m., 9 a.m. London time most mornings, as you'll be aware. So in that vein, what else are we watching this week? What are the key events, key macro data points that might influence markets and change trends or push them off course for a bit? Well, there's three key themes this week. Firstly, of course, it's Jackson Hole, the major Kansas City Fed annual economic symposium that Jerome Powell speaks at, Christine Lagarde, several central bankers from the world, around the world. And it's often a time when Powell sets the tone, makes quite a major key speech. So that'll be watched closely, whether there are any signals on interest rate expectations, the future path of rates, and how the Fed feel about the economy and inflation. On top of that, we've also got a BRICS summit. Now, in terms of geopolitics, BRICS is becoming increasingly important. This is the organisation, Brazil, Russia, India, China and South Africa, whereby they're bringing in lots of southern countries, south as they call them, that are starting to join and create a bulwark against the Western political institutions like the G7 and so on. So the BRICS summit's really key. Over and above that, we've got Nvidia's earnings on Wednesday. Of course, is one of the mega cap tech stocks. How it responds to earnings is critical. There's a few other earnings out, but most of the S&P is now done. And then the third key theme is various bits and pieces of data, macro data, particularly the flash PMIs on Wednesday. I think they'll be watched closely because it'll be interesting to see how August is starting to pan out in terms of global economic activity. And there's lots else going on in terms of macro data. To see all that, just access our week ahead on Substack. Look for Chris Watling on Substack. You'll find the week ahead. Do sign up. It's free. Tells you what's going on, all the key events that are coming up. So that's it from us. That's your morning market hit for Monday, 21st of August. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.